Market update time. Joe, it has been a minute.
Yeah,
How's things?
it's good. It's good. Today's like the first day of actual winter in middle of February in Boulder. I'm kidding, but obviously everyone probably knows we've not had that cold of weather and there's not a lot of snow and yeah, so not a great year, but all is good otherwise.
Outside of weather, how do you think the year is going to shape up for the industry?
I think it's an interesting year. I published in the newsletter maybe a month and a half ago our 2026 outlook. I didn't call it predictions, but I guess it was really started as a predictions issue. I think we've seen some interesting deals, which we'll talk about. Uh, January is a common time to announce a lot of these things. Part of that is just because AHR is this year, or is this month usually, or early in the year. Two, it's just the beginning of the year, so there's a bit of an overhang. You probably aren't going to announce something in the middle of November or in December around funding or acquisition. So you'll wait until January. So we have a bit of a backlog. Um, but I think it's shaping up maybe how I expected. We have OEMs still heavily investing in digital strategies. We'll talk about that. You have earlier stage companies raising money versus later. I mean, some later stage companies, but they really have to prove that they are successful. It's not just we need more money to keep operating. So I think that's another trend that we're seeing. And I think it'll play out toward in that same trajectory, right? I think early stage companies will still probably have an easier time than later stage companies raising money because they just have a little bit more growth ahead of them. I think the things I'm digging into on my side for the newsletter, just thoughts. One is just the fragmentation in the market. I'll have something in the newsletter in the coming weeks on just this big barrier, I think, to our firms or companies in our industry scaling is the raw fragmentation. And that's actually at every level of the value chain. So wherever you look, it's fragmented. And so what that really means on one hand is you can find a customer who will buy your product and that might be able to keep you going, but that customer might be under 1% of the market. I think that also has a really interesting impact on TAM, which I think we might talk about a little bit, where when I hear and I read firms say the TAM is this big, or we think the TAM is this big, I sometimes think it's actually not a TAM. It's almost like many TAMs that you can just logically put together in your head as a TAM, but you can't really attack that market as a market. So commercial real estate versus retail real estate versus multifamily real estate versus institutional real estate. You could say we have a solution for all of them. The TAM is this big. What I would respond is, I don't know that a solution from a company can really attack that whole TAM. It's funny. I saw something. Last thing I'll say, CBRE made a comment. They got a question. I think it was either their quarterly earnings or it was just an investor conference they were at. And it was asked, I think, mostly about the facility management business, right? So they are in the buildings running the facilities, and their business, I think, is low single digit billions, right? So it's like $3-5 billion business. Somebody asked them, just an analyst said, how do you think about TAM? And the response, I think, from the CEO of CBRE was, this is not a direct quote, but it's like, we've thought forever about TAM and we can't really figure out what the TAM is. And again, totally paraphrasing.
What specifically for the FM?
For FM business, right? So like that's a bigger business than the technology to help run the facilities, obviously, because you're actually running the facility. But I thought it was interesting. It's like if CBRE can't really figure out the TAM, like can a small startup? I don't know. Maybe they can, maybe they can't. But it was just a really interesting comment. And he kind of
has to be much bigger though, right?
I mean, maybe, yeah, I think so. But there's not. I mean, I'm going to write about this in the newsletter too, because I'm sharing this just as like an interesting comment that I'm still thinking about to your original question. They're single digit billions. JLL similar, a little smaller, but also similar scale. Cushman a little smaller, still similar scale. And there's a few other companies that do facility management. There's probably a lot of private companies that at the margins are doing some local facility management. But yeah, I don't think it's hundreds of billions TAM business. It could be 100 billion TAM business, facility management. Also, a lot of people self-perform. So like, how do you even account that for the TAM? We're a university. We have our own team. We do almost all of our own facility management. It's not really a TAM, part of the TAM for selling facility management services then.
Yeah.
But it's the top down, like how many buildings are there? How much money does each person spend square foot on facility management? That might overstate the TAM.
In layman's terms, how do you work out the TAM?
I personally prefer to go bottom up when I'm doing a TAM analysis for a client. So what do I mean by that?
Mm-hmm.
It's not there's 87 billion square feet of real estate in America. It's what are the types of buildings that you can focus on, size, type of building, like use of building. It's a restaurant, it's a grocery store, and then build it up. But then also look at what's the current competitive landscape. So one of the things I did in the newsletter talking about sustainability software related to Cambio, well, let's actually find some data. And there is good data on sustainability reporting. How many buildings are already using a software solution, right? So like you could count them in the TAM, but we also know conquest sales in our market are very difficult. So if we know the vast majority of buildings are already using sustainability software, the TAM might be that big, but the available TAM to you is probably much smaller. And that's the factor that I also think can be forgotten.
That's a nice little nugget. Hopefully people enjoy. So today we've got quite a few topics to run through. I think it's been a pretty busy start to the year. A few around investment, and then if we have time, we'll touch on some other bits around products.
Yeah.
For those that didn't see, we saw over the last month a news article from Copeland that they are going to acquire Bueno, which is super exciting for everyone involved at Bueno. Obviously, we know them pretty well in the space. Let's set the scene. What does Bueno do?
Yeah. So Bueno, I generally would put them into the fault detection and diagnostics category, though they do more than that. And I think fault detection, if you think of the Lawrence Berkeley National Lab framework, they talk a lot about energy dashboards, energy management systems, fault detection, and then automated system optimization, which also could be automated supervisory control. But that's like, we are controlling your HVAC system from the cloud, or the processing is in the cloud and we are optimizing for weather and whatnot. So those are the three levels that I like that framework. You could argue there's more details underneath. And Bueno is in that fault detection piece. So they are pulling building automation system point data out of the building. They are analyzing it, rule-based, statistical-based, and they're getting pretty close to root cause analysis, right? Like you're uncomfortable in the room. Why are you? Oh, it's because there's a problem in the VAV box. So they could actually get you that. Much like Clockworks, much like Sky Foundry. Yeah. But they do have some energy management capabilities as well, right? So if you just have 1,000 locations, one of their big clients is Woolworths, I think the biggest or one of the biggest grocery stores in Australia, hundreds, if not 1,000 locations. You need the enterprise view. How much energy is being used? And Bueno does that. The unique part of Bueno is they're particularly good from everything I've seen on the refrigeration asset side. Grocery stores have HVAC, but really their critical system is the refrigeration system, because if the food melts or spoils, they have to throw it away. And grocery stores operate like 1%, 2%, 3% margins. So losing a bunch of your product to sell is going to be really, really bad. So Bueno is pretty good there, hence their work with Woolworths. But they've done work with large institutional owners of real estate too, offices and the like.
Okay, makes sense. So with Copeland, what was your general thought process as to why a big business like Copeland, owned by Blackstone, would want to acquire Bueno?
So Copeland is interesting. There's a couple dynamics. There was an article, I saw it in Reuters, but in November of last year that Blackstone, which owns 100% of Copeland, is looking at taking it public. Not surprising. It used to be a business within Emerson. Copeland was the product name, right? Copeland compressors, really well known. But now the company is called Copeland. And they do more than compressors. It's just that's a really big, known, visible part of the business. So Blackstone's trying to take them public. And I would say that, like a lot of companies that are in the HVAC refrigeration stack or products business, having a digital strategy.
Did you see them at AHR?
Yeah, exactly. Yeah, they had a big booth at AHR. They also make thermostats, like home thermostats. They have a few different brands. So they do more than compressors, obviously. They do a lot on the cold chain side. So if you're a grocery store, there's a lot of capabilities that they will sell you, from core refrigeration up to monitoring and the like. But I think that they're looking, this is my speculation, they're looking at the digital strategy. They're looking at, well, how do we have a more complete digital strategy? And if you feel like you're really far behind, buying a business, and Copeland plus Bueno makes sense because they both have a lot of interesting capabilities in refrigeration and cold chain. Bueno brings them a little bit more into commercial buildings, and it gives them that anchor platform to say, we're building a digital strategy. And I think that is pretty important for these companies, especially if they're public, right? Because as you're public, you're going out there saying, we're a better investment, we're a better business than all of our peers. Having a digital strategy becomes pretty important there. So I think that's a big part of it too.
Is that why we're seeing OEMs now more committed than ever when it comes to owning that software layer?
Yeah, I think this is, maybe last year was the first year, or it was getting close to one of the years where all the big OEMs, HVAC controls, they have a digital platform. It's not just, we launched something 5 years ago and it's still sort of alive, but like they're all pushing and promoting and branding that solution. And a few of them, I mean, I used to work at JCI. I was there 15 years ago working on a very early version of this. But at the time, we were kind of the outlier. We weren't the only big OEM that had a cloud platform, but we were one of the only ones. And now you look at things and every single one of the companies has a solution there that would fit into that part of the technology stack. And I think Copeland wanted to be able to say, we're here too.
And I think it's interesting because what you're referring to last year is around that controls piece.
Yeah.
Whereas Copeland is very HVAC heavy. Do you see more acquisitions from similar businesses to Copeland that are strictly HVAC?
It's a good question. I don't know that I've seen a lot so far, but I think you could see them. Companies that I would probably look at that you would logically put them a little bit more into components versus systems and solutions. That's overly simplistic for Copeland, especially since they are pretty strong also on refrigeration. But you could look at a Danfoss, you could look at a Belimo, you could look at maybe Carrel, all European, but coincidentally, you could maybe look at Lennox as a business there where, they have a pretty very robust home residential HVAC business, commercial, light commercial, very strong there too. And then maybe some of the Asian-based HVAC companies, Samsung, LG from Korea. But I could see it logically making sense. There also, though, has been a bit of a separation between HVAC and controls. JCI splitting or selling the light commercial and resi business. HVAC business was a bit of a sign there. The fact that the strongest controls companies, the big four, we would say, are Honeywell, Siemens, JCI, and Schneider. None of them really play very, very deeply in HVAC. I mean, JCI is the closest, and they're really only in the big commercial buildings now.
Yeah, it's a really good point. Well, let's park that for a second, but I think that's a really interesting acquisition, especially at the start of the year. I'm very fond of Copeland and what they're trying to do, especially Bueno and the team there.
Yep.
Another one from your newsletter, I'm sure a lot of people listening to this or watching this will have seen Cambio raise.
Yeah.
Again, let's talk a little bit about what or who Cambio are.
Yeah.
What they do.
So early stage company, this was their A. So again, at an early stage. So there's kind of two things happening in the market and with Cambio. You have a very developed and robust market for sustainability reporting software for real estate. It's kind of a mouthful, but that is, I need to report to Energy Star. I need to do my GRESB submission. I need to do SASB. I mean, there's dozens at this point of different reporting regimes. A lot of it is commercial real estate focused, but it's not exclusively commercial real estate. So at the end of the day, you are typically depending on utility bills. You want a complete year or multiple complete years. And there's a lot of companies that do this, and that's NG and Schneider, which has a business resource advisor. And those are pretty old legacy businesses that are still really strong. And then you have some of the upstarts or more, innovators. Measurable would be a good example. DeepKey, more based in Europe would be an example. And the core thing, it's not all they do, but the core thing they do is they help a portfolio with sustainability, with resource data management and sustainability reporting. And that does stretch into energy management, but I would say they aren't as strong at what you would call like fault detection, right? Connecting to the building automation system, identifying. That's not to say they can't do it. It's just less of their focus. So Cambio, on one hand, does that. They launched, I think it was last year, maybe it was 2 years ago. I think it was last year. They launched a free tier, which really meant to, or was designed to replace or maybe defend against Energy Star being shut down, potentially. Hasn't happened, could happen. So they do that. So that's very much in that same square. Measurable has a free tier as well to do the same idea, right? If you're worried about Energy Star, we can back it all up. And technically, you can do that pretty easily. And I go into some more details in my newsletter. But what Cambio also does is they talk about AI-driven capital planning. And they don't always use that exact phrase, but I think that's the easiest way to think about it. And it's capital planning with a net zero lens. I wrote about this back in 2024. I called these solutions enterprise decarbonization analytics, kind of just a name I thought of. There have been reports from the government I've seen that kind of talk about this as well. But the idea is you have a building, you know what the Energy Star score is, you know how much energy, you know it's less efficient than it should be. Maybe you've seen energy bills go up over time, energy consumption, not just the cost. And you're looking at it and you're saying, well, what do I actually have to do? And a lot of times you hire an auditor, say, can you audit my building? Can you recommission my building? Can you, look at retrofit opportunities? And what Cambio says they do is they say we can actually do that with AI and we can automate that. It's not so different in some ways than what First Fuel did back like 15 years ago or Retroficiency did 15 years ago. They were mostly just going to utilities and saying, we'll help you do this across your utility territory. Cambio is saying, we'll help you do this across your portfolio. So maybe more geographic distribution because it could be a portfolio across the country or the world. So they do that too. I think what's interesting is, though, putting those two together is pretty interesting to me. It's kind of an innovative way of going to market because historically those have been thought of as two different lanes. There are other companies that do the AI capital planning with a net zero lens, but most of them do not do the core sustainability reporting. It's almost like their story would be, you're doing sustainability reporting, you need to actually decarbonize your assets. What do? Come talk to us. Cambio is saying we can actually do both. I'll stop there. That in terms of the what they do, because I feel like that was pretty long-winded.
You mentioned a couple of companies that I'm sure people who operate in this space will be very familiar with: Measurable, DeepKey. You could even look at the IBM acquisition of Visi back in 2018, 2019. I can't remember. What is there anything that makes Cambio uniquely different outside of this AI and capital planning tool?
That's the one that they talk most about. The press release did highlight agentic AI workflows. There were some references that were beyond just sustainability reporting, decarbonization as the core goal. So I suppose there could be some strategy on their side, and I have no inside baseball here, but some strategy on their side to say we're actually going to do much more than just the decarbonization story based on what we've built. That would be very unique. At the same time, a lot of times there are different lanes, right? You have a facilities lane, maybe that's related to energy and sustainability, and that could be related to capital planning, but that's totally different than leasing. I haven't seen a lot of cases where we're your sustainability tool and we're going to help you with leasing. Even though you could make the case, if we have a more sustainable building, more tenants will want to lease from us. It's just, they're kind of different lanes. Yardi, the ERP for real estate, or companies like Yardi, they have a pretty solid base of just being the financial back end for a lot of real estate companies. So I think the uniqueness that I see is sustainability reporting and then bridging the gap or bridging over to actually decarbonization, which has been a struggle. You talk to sustainability leaders, they sometimes say I use 100% of my time just with reporting. I don't have time to actually decarbonize. So making it more efficient should help.
It's a good point. I was going to reference that. Anyone that you speak to would say at least 90% of their time is spent on reporting versus actually doing the decarbonization work, which I think is probably the biggest pain point in this part of our space, outside of already being fragmented. You were alluding to this earlier about many buildings already having some kind of sustainability software. And this is if you look at some of the other technology classes or applications in our space, this is a relatively mature lane.
Yeah.
With Cambio or other companies in general, does this mean this is now a replacement market for technology like Cambio?
Yeah, I get into this in great detail in the newsletter because I think it's an interesting story. So just to put some numbers around it. So Energy Star, the portfolio manager part of Energy Star is what commercial buildings participate in. And very simply, you give a year of energy data and an address, a zip code. There's a few other data points you're supposed to fill out, but you can default to my building's this many square feet. I probably have this many employees. It gives you a score. It's a 0 to 100. So it's a percentile. And it's based on similar buildings. So you're not comparing, like a hospital to a office building. And you're also not comparing a building in Boston to a building in Miami because they're just going to have very different profiles based on weather. But it gives you a percentile based on normalizing for all those factors. And 80 means you are better than 80% of buildings like your own. So just it's a standard percentile. So you need a year of data. Most companies use utility bills. And I actually, when I was particularly at Lucid years ago, we would use real-time data. But if you even had a 15-minute break in your data, which is common, you wouldn't get a score. So most people use utility bills. They actually publish a couple lists. They're public. I linked to them in the newsletter. One is, who are all the vendors who actually are working with buildings? They don't identify individual buildings. They identify the vendors or service providers to the buildings that are helping to benchmark. And they actually have a count. So you can add up how many buildings do the vendors support. You could, as a building, go to Energy Star and actually put in your data using the portfolio manager web interface. I don't think they have a count for that. And then they have one for just web services. So web services are actually like an API exchanged sequence to send your bill data, your details, and get back your Energy Star score. Top line, service provider list, there's about 465,000 buildings listed on that public site. And then of the API list, it's like 250,000. So it's, let's say, roughly half. You then look at, well, how many buildings are there in our country, in America? Because this is US. And there's about 300,000 built commercial buildings in total that are over 50,000 square feet. And I'm just arbitrarily picking 50,000. But I think that's a good number of, there's some cities that require you to get an Energy Star score, but it's usually 50, 75, 100,000 building size or above. That's not always the case. But when you get below 50,000, you just get into a lot of very small buildings. So my point being, there are more buildings, by my count, using some of these public sources that get an Energy Star score than are over 50,000 square feet. And about 2/3 of them potentially are using web services, which means there's a software solution already in place that is exchanging the data. So that kind of tells you this market is pretty saturated of vendors that are already supporting. And there's like 110 vendors on this list, maybe 115, but there's over 100. Wow. So you have a very long tail though, right? So of the 400,000, the leaders there, I think one is definitely Resource Advisor from Schneider. NG's another leader. I might have flipped that in terms of one or two, but they're both like 35, 40, 45,000 buildings. So they're both 10% of the market, but you still have another 95 to 100 vendors. My point being, it doesn't look like there's a lot of white space here. So for a new entrant, I don't know where there are buildings that need sustainability reporting that don't already do it. And a lot of them seem to already be using software. So to your question, that means we're talking a lot of conquest sales. And that is feasible. That could happen, but that has been notoriously difficult in our market. When I talk to owners and operators, the last thing they want to do in most cases is rip out a solution and replace it. Unless the solution they have has become really poor. Service support has become really bad. It's gotten a lot more expensive. But as long as it's kind of in a steady state, it's very rare, at least that I've seen, for somebody to say, I don't want to use this solution. I want to find something that does largely the same thing, but it's just a different company. And I think that's just a challenge for all of the companies fighting in our market, not particularly Cambio or particularly anyone else. And it's also one reason why I think companies can get to a bit of a level of having some scale, but then they plateau.
Yeah.
So yeah, that's the quick TAM analysis.
Well, let's stay there for a second. How do you think, based on what you're sharing, how do you think investors see this space then?
I think,
Because
yeah,
80 million for a Series A is still
it's a pretty big A.
pretty
Yeah.
strong round.
Yeah. I think there's a couple dynamics, and this is more general. I definitely, of investors I know, I think some of them are souring on smart buildings. Not going to name names, obviously, but I think there haven't been a lot of successful exits. I think the companies, and this kind of brings us to talking about Clockworks, the companies that clearly have scale, clearly are in a market leadership position. And I'm not saying leadership winner take all. I don't think that exists in our market, but I'm saying leadership, you are clearly going to be one of the winners in this market, however it shapes out in the future. I think putting money there is still safe or still a potentially good investment. But I also think that, the smaller innovative companies that are being backed, if you don't have a lot of experience investing in smart building tech, some of what I'm saying is probably just very different. You might still be doing the top-down TAM analysis, right? There's 87 billion square feet in America. A lot of it needs sustainability software. Like, without knowing, a lot of people I talk to, they don't even know that Energy Star resource exists. And it hasn't been updated now for like a year, which is unfortunate, but still a year old. That's still pretty good in our market. So I think that's part of it. We have sometimes it seems like there's a view that this is a very much a SaaS market, like all other SaaS markets. Something I put in the newsletter talking about Cambio was back 10 years ago. Enernoc was a public company, had an energy management software solution, pretty good product, pretty sizable compared to peers. And they had a slide, and I put it because it was just so interesting. I forget the exact vendors, but it was like CRM, Salesforce, Workday, human resource management, Enernoc, energy management. And they were saying, like, there will be a platform for energy, just like there is for workforce and HR data, just like there's for customer data. In all honesty, we have not seen that materialize. Right? We still have dozens of companies. I think it's more fragmented. There's no Salesforce of energy management. But I think if you are investing with that thesis, you can absolutely justify writing pretty large checks. And maybe that happens in the future, right? We've been trying that for at least now 10 to 15 years, and it just hasn't materialized yet. But I think that's probably another justification that somebody could make.
Yeah, good point. You touched on Clockworks. Let's dive into that. Before you mentioned you could put Bueno in the FDD category. Clockworks are 100% in the FDD category.
Yes.
Let's talk about, let's highlight who they are, and then let's talk about their round.
So Clockworks is actually one of the oldest companies, I would say, in smart buildings. When I was back, 2011, working at JCI, we met the team, same founders, same folks involved in the business, and they were making fault detection. So just like I described with Bueno, I would say Clockworks has just built a lot over that 15-year period, a lot of interesting and advanced capabilities around fault detection. The use case for them is complex buildings, hospital, institutional, large office. You might have multiple building automation systems across different buildings, but you want a single place to go and figure out what are the real problems in my building? Can I prioritize them? And then I can go act on them. So you still need a person to go figure out, like, what is wrong with that air handler? What is wrong with that VAV box? But this is Clockworks and other fault detection will tell you this is the piece of equipment that is having the problem. This is a bigger problem than other pieces of equipment across your portfolio, and probably getting even closer to what is that actual root cause, especially if you're somewhat technical and you kind of understand how HVAC works. So Clockworks has been around a while. I would put them, they're in an interesting category in that overall they haven't raised a huge amount of money. We're talking about a $15 million round from Carum Equity that they raised in January. The last round that I could find was in 2023. Also Carum and then Schneider or SE Ventures from Schneider. Schneider's been a big backer of Clockworks for a while. And I think at that one, they said they had raised 2025. So we're looking, maybe they've raised in the 50, 60 million. That's more than average, but that's not that much more than average for a company that has been around for 15 years. And I think by their count are into the hundreds of millions of square feet. Again, some of the research I've done in the past, the median size of a lot of smart building companies is in that 100 million square feet. There's a lot of firms that have much less.
I think on the website it's 300 million.
Yeah. Bueno said they were at 140, 147, 148, 150, something like that million. And I thought Clockworks might even be bigger than 300, but they're well into beyond where the average smart building company is at, but they haven't raised that much more than average. And I'm doing some of this math in my head based on some things I've written about. So that's to your earlier question, you can justify that because they really have a leadership position on the technology and innovation side around fault detection. They clearly have a lot of longstanding customers. They have a relationship, a go-to-market relationship with Schneider. So they have multiple ways to go sell. I think I've seen posts on LinkedIn where they've talked about how they've really dug into going to the integrators, not just the building owners. And that's just a different motion, but it's also very important. So there's a lot to like. And I think it's rare to find companies that really have that breakout, from a scaling point of view, have broken out. Plenty have breakout potential, but to have actually broken out. And I think that's the main story with Clockworks. The other.
Well,
go ahead. Yeah, please.
Outside of Tritium, I would say Clockworks is probably top 5, maybe at least top 10 in terms of best channel development.
I think that's right. Tritium would probably be number 1. You could say Sky Foundry has done a good job engaging the channel, and maybe they were a little bit earlier to that.
That's a good point.
Within core controls, I think those would be at least beyond the list, the 3 that we just described.
So if you're Clockworks, that as a market leader, let's say again that top 5 in the FDD space, but I would personally assume they would be higher on that list. If you're thinking about long term, after this raise, continuing to gain market share, both from a building owner standpoint, I think they're very strong in terms of healthcare and pharma, as well as also universities. Then obviously we're talking about the channel piece. Where would you see that business going 3 to 5 years time? Because they clearly are one of the more successful technology vendors in our space currently.
Yeah, I think so. International, I think there's a lot of other markets where you probably could, you just have less fault detection so far as I can tell. So there's that opportunity. Within channels, there's actually a lot of different channels. Fault detection still, I think, we talked about sustainability software as being already fairly well penetrated by the numbers I was able to pull and just kind of rough analysis I was able to do. I think fault detection is probably the other side of that, right? A lot of firms, a lot of owners of buildings, and even the service providers servicing the buildings, they might think, I can do all of that in my building automation system. Now, the answer to that is maybe you can, but it's going to take you longer. It's going to be harder to use. The ROI isn't going to be there because of everything I just described, right? You're putting in more money. You might not get as effective data back on what are the real problems. You might not be able to address them as quickly. But I think there's still this thought, maybe I don't need fault detection. This is not my thought, by the way. This is just in the market. Maybe I can just use my building automation system. And there are probably some cases where that is true, certain building automation systems. But the flip side is there could be a very big market or a relatively sizable market for buildings that aren't using fault detection that actually would get a lot of value out of it. I will tell you, when I talk to some owners and operators, they're aware of fault detection, but it isn't necessarily as much of a priority as I need a sustainability platform because there's regulations or de facto regulations for reporting. So I think that's an opportunity for Clockworks. The flip side, do the building automation systems build in much more capability to do fault detection inherently? The challenge there, of course, is if you're a portfolio, you probably have multiple building automation systems just because that's just how portfolios typically are. So it isn't necessarily going to help you by having a building automation system with fault detection and another building automation system that is also on your campus that doesn't have fault detection. You might look at that and say, no, we just need a enterprise full portfolio fault detection solution. But I think that's an opportunity. The other one that I think every company in our space thinks about is just expanding share of wallet, right? What else can we be building? Fault detection connected to work order management. Fault detection could be connected to this capital planning thesis that we described earlier. Better energy management could fit in it, which Bueno was kind of known to do. Yeah.
I haven't seen it yet, but could you see ESG firms start to partner with FDD companies?
You saw that has happened a little bit. It just hasn't. Measurable bought a company, I think in 22 or 23, called Hatch Data that was spun interestingly out of
Yeah.
Enernoc that did some fault detection along with a lot of detailed real-time energy management. And then DeepKey bought a company called Fabric, I think around the same time, Fabric with a Q at the end, that had some fault detection as well. Now, since those two companies were bought by those two larger ESG firms, you don't hear a lot about either of those products. I mean, I think they're still available. If you go to the website, you can still read about them. They're not heavily being promoted, but that was the first version of what you're describing.
Good point. Very good point. We've got a bit of time, so I want to talk to you, or just get your pulse check in terms of what the big incumbents, the OEMs are doing.
Yeah.
I think, was it the start of this year or end of last year, we saw Trane Cloud launch?
Yeah.
And you also referred previously about some of the larger companies, most JCI, Schneider, Carrier.
Yeah.
They now have platforms.
Yes.
So
Yep. So
are OEMs becoming software companies?
So on a revenue basis, this is still a small bit of revenue compared to the other side of it. All of these companies are doing excellently. Just as like top line revenue growth, backlog. I think JCI just announced they have the largest backlog they've ever had in the history of the company. A lot of that is data center related, reindustrialization to some degree too. But they're selling a lot of chillers. They're selling a lot of controls. Siemens and Schneider do a lot of the electrical distribution as well. So there's a lot of that, switchgear, things like that they're selling to data centers. So I say all that to note the software is a critical part. They're all investing. We can talk about that more. But in the grand scheme of things, these are small businesses compared to those bigger growing areas, if you will. But it is true. I actually, this past newsletter, I re-updated. I had a visual from maybe a year ago of just each OEM with a cloud platform. Some of them have had multiple iterations or just multiple cloud platforms over the years. And I updated that because, as you said, Trane launched Trane Cloud. They had last year launched something called Trane Connect. And the way they summarized it very high level, Trane Connect is more of the ability to collect data out of the building and normalize it. Trane Cloud is kind of the application layer, if you will. So they go together. It's not one is replacing the other. It's not that we launched something last year, it didn't work, we're launching something new. This is kind of the next step in that iteration. They also bought BrainBox, which has a variety of kind of cloud analytical capabilities. I would argue it didn't explicitly say this in this press release, but that's probably just part of or adjacent to Trane Cloud and could run on top of the Trane Connect infrastructure. So that's what Trane announced. But yes, every OEM has a cloud-based branded platform where it's like it has a name, it has a focus, it has its own website, marketing material, everything. Some of them are a little bit older, some of them are a little bit newer, some of them are talked about heavily, some of them are not talked about heavily, but they're all there. They all and to your question, I don't know that these become huge drivers of revenue and that we're going to think of Carrier as a software company. But I do think there's a lot of value in having these capabilities. Better attachment rates for service contracts, which is usually more profitable than just selling the equipment. Obviously, there's a long tail to service, right? You buy a chiller, you're not expecting it to be replaced in even a few years or 10 years. You want to keep it for longer. You probably want the OEM to help you with service. Having a digital layer helps make that stickier. So that's one of multiple reasons, but I think that they will be in the software game. At the same time, I could see some of these companies pull back a little bit, rethink their strategy. No predictions on who that is. It's just you look at some of these firms, and every 3 to 5 years, they kind of have gone historically through a cycle of launch a product. I mean, I was there at JCI 15 years ago, launch a product, invest heavily, didn't work quite as well as we thought, pull back. 2 or 3 years later, invest in something new. So the history is there in some cases, which I think is this almost like tug of war between we have to have a digital strategy, but man, we're really having trouble figuring out how to make money off of our digital strategy. Like, how do you reconcile those two things? This year, I think we'll have an answer or some answers to that.
Yeah. Would the answer be one that they are seen to be taking market share, or is the other answer, it's not working, they have to acquire?
I think that those are two answers. There is, we need this capability. It didn't work. We learned a lot. Let's go buy a business. There's also an approach. We aren't overtly selling these products. We are using them internally to deliver service, because at the same time, these companies typically have in the thousands of technicians or technical staff that can go out and actually fix things, can actually roll a truck. But that industry is aging, right? So that number, I think, is more likely to go down than up. Not because these companies are going to downsize. It's just because we can't find enough people to fill these roles. Technology will supplement that. And I think that isn't necessarily, we're selling you a software license, Mr. Facility Leader for hospital. It's, we used to need a service contract with 10 people to make sure your building was running in top shape. We have technology now. We can do it with 5 people. But those 5 people are more expensive because they're augmented with technology. So you're getting a bit of a deal because you're getting the same value. Yes, our costs have gone down, and we recognize that. But all in all, it's technology enabled. And I'm definitely seeing those themes come out from some of the OEMs in different ways, right? Like the attachment rate of how many chillers are connected to the cloud. And that number for Carrier in particular is going up a lot. It's going up significantly. And they talk about that, if not every quarter, most quarters. Trane also has talked to just a fair bit about connected equipment. How many pieces of connected equipment do we have? Still going up. At the same time, that business model is a little different than straight SaaS. If you sell somebody a chiller, they will probably want you, the OEM, to do the installation, configuration, all the setup on the front end, and they probably will want you involved in that ongoing service. So if you're able to deliver a connected service that is more valuable, same cost for you to deliver, less cost for you to deliver, even that's an advantage all around, and that is definitely part of the digital strategy. But it looks very different than some of the startups we've been talking about, where they sell you a software license.
You've obviously lived this, but just how difficult is it building a software within a larger company?
I think
I'm getting it to stick, right? I think your point, which is very fair, is there's a lot of products that have been brought to market. I've not been in the space longer than you, as long as you, but within the last years, you're seeing different iterations of these products. And it's like, oh, how different is it? How hard is it?
Yeah. My quick answer. So product guy here, right? So like building the products, I wouldn't say is that much more difficult. But again, I'm the product guy. So I was responsible for making sure we could build good product. I think it could be, it could take a little longer. It could be a little bit more complicated because you might have had, so more cooks in the kitchen. I definitely think on, the part of product management where you're trying to understand the market, understand the competitive landscape, understand, market opportunity and how to take advantage of those market opportunities. There was a lot more signal or noise and signal coming in because you just had so many different salespeople across so many different channels. And if you didn't really understand how to segment all that, you could easily get overwhelmed, which would, at the margins, I think, translate into less expedited development of products. So you're shipping less, potentially. I think the other side of it, a lot of the companies, and this is, I think, not just for HVAC and controls and like smart buildings OEMs. I think it's for any large company. You have a lot of established channels to market. You have a lot of established products you are selling. And you have a lot of salespeople who know what they're doing and how to sell what they're really good at selling. So for our industry, that is chillers, service contracts, building automation systems, and the sales process, how you price things, how you talk about the value, how you deploy even, is very different for those things compared to cloud software. And I think that's where there can be some friction. I would get questions such as, well, what's the cost, right? Because a lot of things these companies are selling, if it's chiller, it's a cost-based pricing model, right? Cost is a certain amount to you, the distributor, or the branch that is acting as distributor. You get margin, and like that's how you price things. Of course, there's going to be some quantity discounts. Of course, there's going to be special pricing in some cases. But software, it's value-based pricing. And I actually got an interesting email from somebody maybe last week who said, I just am starting to think like value-based pricing does not work in our industry. I don't know that I'm all the way on that side, but I think it's a little bit nuanced. Back to our point about fundraising, value-based pricing is a really profitable model for the seller of the software. And that can justify some of this fast growth and also these high valuations and high multiples. But if that just doesn't work in our industry, that kind of changes your underwriting assumptions. And I don't know that everyone has caught up to thinking that. And I personally don't know that I think value-based pricing is totally wrong. I just think it's maybe a little bit more nuanced. And it's certainly, to your direct question, hard for somebody who's very used to selling out of a branch everything on a cost basis to all of a sudden sell this other thing that is value-based. Even the questions that individual will get from clients, like, oh, well, what's the cost of this? And like at the end of the day, is it the storage space on Azure or AWS or wherever else? Like, is that what they're paying for? No, they should be paying more than that, but that's the cost in a lot of cases for cloud-based software.
Joe, that's all we've got time for. Really appreciate your insight. As always, we have another episode of the Market Update coming out, and hopefully some more interesting news from the market.
Yeah, it was great to be here. It was fun to do this. First episode of the new year, so we had a lot to cover, but there'll be more to come.
See you on the next one.